Hello, everybody, and thank you for joining us for another episode of the Financial Commute. I'm your host, Chris Galeski, joined by wealth advisor Jon and Chris. Jon, thank you for joining us.
Thank you, Chris. Good to be here.
It's exciting times. We're going to talk about something pretty interesting in terms of your experience with coming over here from Europe to work in the United States, and challenges and things that you've experienced, but also to help others. Before we even get to that, I think we should start by saying, happy Thanksgiving to everybody. I know we're grateful for the relationship that we have with many of you, and wish your families all the best. So happy Thanksgiving and holiday season. Last week was really interesting. Inflation data came in a little bit lower than expected by 1/10 of a percentage point, and the market just rallied 3.5–4%. Stocks were up 3.5–4% to finish off the week. 4 straight days of gains. Gold held relatively flat. Bonds even, yields came down a little bit. So it's interesting. We're still in this world of bad news is somewhat good news, although lower inflation is just more relieving. And I think maybe the market's tying in, okay, maybe the Fed won't have to continue to raise rates and suffocate the economy. Any points you'd add there?
It has been an interesting week and turn of late. And interesting as you were saying that, living previously in the UK where the time difference, maybe we were ahead by the hours. I feel like being in the US, I'm in the future a little bit, because what happens in the US the rest of the world tends to lag and it catches up. And similarly in the UK, inflation data had come down and there's been a subsequent rally. You'd often see a rally happen in the US and then the rally would then happen elsewhere. So I feel I'm living in the future, maybe not by time difference, but I see what happens here, and then I see that get repeated. Back in Europe,
our developed economies, there's a lot of similarities to them, and there's a lot of reasons why things that are happening here or there and vice versa affect one another, especially when it comes to supply chain inflation. But not to go down a rabbit hole, I think we have a number of clients that either live here in the U.S. and move overseas, or even people that have come from overseas here to the U.S. And there is a whole host of things that people should be knowledgeable about when it comes to being an expat and living abroad or living here in the U.S. And you've been able to uncover a number of different key points that people should be aware of that can help them. I mean, let's start with Social Security. I think you gave me a stat about a number of different treaties or agreements that countries have in place to help with Social Security, or how that works.
Yeah, I did. I did a post on this recently on LinkedIn, because it was something that I experienced coming over here. So coming over here mid-career, call it, I had been living and working in the UK, contributing to the equivalent Social Security there, which is called national insurance, and that's effectively the state or the federal pension, if you like, in retirement. And coming here from mid-career, I was thinking, well, I've got all these contributions in the UK. Do they just kind of vanish into thin air? I come over to the US, I need to make 40 quarters of payments to get full Social Security.
No, to qualify.
To qualify, to qualify. So I did a little bit of digging, and actually something that I found out was that the US, and I never knew this, had arrangements with over 30 countries, not just the UK, many, many countries. So if you have lived overseas for a period of time, if you're an American citizen that's gone and worked in another country and contributed to that scheme, that equivalent Social Security scheme, then actually that can count as a credit towards your US Social Security.
I love the difference in languages. Here in the U.S., scheme is not the best word, right? But over in Europe, it's okay. So if somebody from the U.S. went to go work in another country and they were contributing to that country's, similar Social Security type of plan, they would also get credit. So
they would get credit, yeah, and they could utilize that. And actually, I've had this situations with clients. I was speaking to a client actually last week, and it was a fellow British person. And they had moved over to the US about 20 years ago, but had a good 10 plus years of contributions towards national insurance in the UK. And they're coming up to age to draw on their Social Security here. And were concerned about the gaps, but actually it's actually very simple to go to your Social Security office, and there's a whole bunch of information on it. And you don't lose out. And importantly, you don't lose out on those benefits, for your family as well that you might not otherwise have had. So
that must be scary for you. I mean, not only were you, bringing your family over here during a very interesting time of COVID and having little one, but you were working mid-career. And so you've got that uncertainty in terms of, what am I able to take with me and what am I potentially giving up? So lots to think through. I mean, how did you evaluate that when it came to, income and assets and a lot of the decisions that you or others might need to make? How can you help other people that are going through this?
Well, I'd say to anyone, so I think it applies whether you have worked internationally before, or you might have the opportunity coming up to work internationally. So if you're listening to this and maybe there's your employer has international offices and is looking at doing a placement for a year in Paris, maybe you're Emily in Paris, for example, to think about the differences between the two of those before you go to the other country. So either if you're coming to the US or going there, there's a lot of things that can be done. Like often you will find these things out after the fact. So
give me an example.
Well, to give you an example, there are different environments will have different types of plans and how they recognize, how they approach, for instance, retirement planning. So if I think about in the UK, for example, there is a vehicle that it's really efficient, very attractive. Well, if I told you, as an American going over there, if you were going over to London to work and somebody said to you, Chris, you could contribute post-tax money, you could do up to $25,000 a year into a portfolio that can grow tax-free. And guess what? You can take it out anytime tax-free as well. You don't have to wait.
Anytime. I don't have to wait
anytime.
No time.
Very similar to a Roth.
Yeah.
Right. So similar to a Roth, but not like a Roth where you'd have a penalty if you did it before 59 and a half. So that is called an individual savings account. That's something that's really attractive in the UK. And I had American clients in the UK that I used to look after, expat clients, and they love this as an investment portfolio, very tax efficient. But if you're an American, it's kind of pointless doing because it's not recognized here. You'd have to report it back if you had gains on that. US is one of the very few countries in the world that taxes on worldwide income. So it's not efficient for a US person to have an individual savings account in the UK. Other countries will have similar schemes. You could continue to contribute to your Roth, your IRA back here in the US, but I had an individual savings account. Had I known that it was not recognized in the same way, I think I would have probably closed that before coming over. You can still hold it, but then you have to report on it like a regular investment portfolio. And if you have international assets, if you have an international portfolio, if you had an international bank account, you've got to file that in your US tax return. So I would have to report, or anyone that has a UK individual savings account living in the US will need to report on that and report on the gains. It's not recognized as a tax-free,
as a tax shelter,
or a tax shelter here in the US.
Yeah. So just to clarify, because it's fascinating and so interesting, because I always thought California was the one that likes to needle everybody with taxes, but maybe it's a little bit the US, right? So if you have an individual savings account in Europe and you're contributing to it, as long as you're living there, that money grows and you can take it out tax-free. But if you're a U.S. citizen and once you leave Europe and come back to the U.S. and you have money in that account, let's say if it goes from $25,000 to $26,000, you don't have to pay taxes on that $1,000 in gains. You don't get that tax-free shelter. Is that right?
Effectively, yes, you could, but there are, and something else we could talk about is there are dual tax treaties between countries. So the US and the UK is a very well-established dual tax treaty. The US has treaties with, it's a lot of countries, I think it's like 70 different countries that it has tax treaties with. But it's important to remember that tax treaties are really to benefit you as a US taxpayer, US citizen internationally, that you have credits against your US income, or that you're not dual tax, basically. I mean, it's looking so you don't dual tax. So if you went and got a job in London and you being paid by an employer and you're paying income tax on those earnings, like you would here if you're earning W-2 and you pay income tax on that you're not taxed twice. So those treaties are in place. But the important thing is that there are different types of vehicles, not schemes. That's a word we use in the UK, but plans that you've got to look at how they are recognised in each country. So the ones in the UK, not that they're recognised in terms of the IRS know what these are, but the treatment might be quite different. And the same going the other way as well. I mean, I use circles going the other way.
So let's say you're somebody that's coming from overseas here to the U.S., or somebody from the U.S. going overseas. What advice would you give to them, sort of like a checklist of things to look into before making that decision, so that way they're best prepared for what they're going into and then what they're walking away from and how that coordinates with other things? Because there's so much going on here between owning assets, income, paying taxes, having retirement accounts, credits for Social Security, estate situations, or more detailed estate planning, I should say. Walk me through some things that people should be aware of.
Well, I think I'm in a fortunate position that I've been on both sides. So I've been in the UK environment, I'm in the US environment, I've advised in the UK and I've advised in the US. But there are very few people that would understand both of those regimes, in any detail. So if you work with a tax preparer here, then you're going to need to work with a different tax preparer in that country that you are either going to or have worked with, or continue to work with that tax preparer. I mean, if for example, if I'm married to an American citizen, I'm here to stay, my kids are dual citizens. But if I, for example, was a single person and I was living and working here in the US like I am now, and I'm going back to the UK, I would still need to file US taxes. So I'd still need a US tax preparer for a number of years after leaving the US. I think planning, I mean, we're wealth advisors, right? Planning is everything. Knowing things like I didn't know coming over here, like how an individual savings account would have been treated. You can make plans ahead of time. I'm working with a client right now who's looking to emigrate to Portugal, and we had a call with a CPA that does US returns. So it's an office where they do US returns, and they also have team members in that same office that do the Portuguese tax returns. And we were talking through realizing gains ahead of going because of the treatment from Portugal. So there's different treatment on what a retirement account produces. Portugal don't recognize the difference between a Roth and an IRA, for example.
Okay.
So we were having a conversation with my client whether they should convert their IRA to a Roth conversion, like we would do here in the US. And actually, there was no additional benefit to doing that if they were going to emigrate to Portugal. Here in the US, there would be a benefit to them doing.
Potentially, yes.
So
especially if there's about to be the same or a lower tax bracket in the future.
Absolutely, it's about planning, and sometimes, but that's a situation where an emigration, they're retired, that's a life choice. So that they're not looking to emigrate to Portugal to save taxes or to do some sort of tax strategy.
Okay.
They're doing it because they want to live their best life, and that's where they want to be. If you have lived and worked internationally, it might not necessarily be because it's been a great dream to do it. It might be because it's been the nature of, you've got a job there, and you've like sure, those that would come over here work in the entertainment industry or
Silicon Valley
tech.
But there are a number of people and clients that we talk to all the time that say, hey, when I retire, I want to spend 5 or 6 months here in the US, and maybe 5 or 6 months in Portugal or Italy or Argentina or other places. Like, this is a common thing. What roadblocks or pitfalls might they run into?
Well, so moving, if they're looking to... Well, assets is the big thing. Yeah. So assets is the big thing. What's your, do you intend to, if you are retiring somewhere or you're spending a period of time there, then you might not be Airbnb for 6 months. You might think, actually, I want to buy some real estate.
Right.
So real estate transactions, the treatment of real estate is very, very different. So if I use the UK example, in the UK, if your primary residence in the UK, so you might want to think about things like the titling of assets is where I'm getting to. So your primary residence, once when you sell that, there's no limit on the amount of the capital gain before it's taxable. It's free from tax if it's your primary residence.
So if it's my primary residence and I bought it for $1 million and it goes up to 10 million and I sell it, I don't have to pay tax.
No capital gain.
No wonder real estate prices are so expensive in certain areas.
But US, if you're US and you had that international, that's for a UK, if it's your primary residence.
Right.
Now, if you had a vacation home in Europe, and if it was the same rules like the UK, where there's no capital gains, and there are some countries like that, then you need to prove, is it your primary residence? You have to think carefully about titling. So you might have, for example, a non-US spouse as well. That happens as well, and families start to mix, and kids might meet non-US spouses, and then you've got grandkids that from the US, and that will then call into play some careful consideration in estate planning. But in going back to the UK example, we owned real estate in the UK. My wife was a US citizen. US citizens are taxed on their worldwide assets. We had to think very carefully about titling of that asset, because had our real estate appreciated by more than, it was 250 at that time, because while we're a married couple, we're not filing US taxes married, filing jointly. My wife was filing as a single taxpayer, so it was a $250,000 exclusion. So had we sold that, and real estate prices in London could move like that over a short period of time, then there's a famous one with Boris Johnson, actually. So he was born in New York, and he sold a property in the UK that he owned, but he has dual citizenship, has US citizenship as well, and the IRS hit him with a tax bill because it was over $250,000 gain, and Boris was selling his primary home. It's quite a famous case.
No kidding. Fascinating stuff. John, I know that the world of living internationally and coming and migrating to different countries or here can cause a whole load of questions, confusion, or even need for clarity. I'm so glad that we have you to help guide our clients and others around a lot of these discussions, and serve as a framework for making this. So thank you for sharing a lot today, and hopefully we can help impact the lives of others that are trying to make some similar decisions.